Well, hey, welcome back to this impromptu live session on the Precision Data Analytics channel. Triple X class flares. Let's go over here. Basically, what we're going to look at here is a very simple Excel sheet to do some very basic Excel sheet in order to analyze stock data. Okay, we'll be using the stock. I'll of course include a link to the template inside of in the description below at the end of the video. But let's go over here, minimize this. Okay. Now, I actually have two versions. The U.S. stocks uses the stock history function from built into Excel. This, of course, is a stock symbol. This basically says pull the date starting with the current year, first month, first day, till today. And this thing over here is sort of like property, like headers, intervals, and stuff like that. You know, interval headers, yes. Interval is daily information. Pull all your basic information, high, low, close, and volume, and adjust it probably also. Okay, that's all it does. Is all you got to do to change the stock is simply come up here and change the stock symbol. Then it automatically updates. Then we got a simple 20-day moving average, right? Simple function here, 20 moving average. 50-day. This is odd. Huh. What's going on here? Did I overlook something here? Oh, so it's right. Interesting. Okay, so, and a 50-day moving average, okay? And over here, you do cumulative returns. Cumulative returns is simply closing price divided by closing price, but you fix the first value, so you fix the B2. Then you calculate it, then you divide it by the fixed value, by the first value, then you subtract 1. High-low is simply, well, it's just simply high-low. Okay, high minus the low. This is just a moving average for high-low, a 20 moving average for high-low. Okay. That shouldn't be a there. And again, all we have to do is to I would say probably the two most basic stock, most common is moving averages. 20-day to give you more, maybe for the current month, the current quarter. 50-day. This is sort of this unspoken rule of thumb that says if your stock is above the 50-day average, it's doing okay. If it's not, we'll see what happens. Okay. Q returns always quite nice. Of course, the advantage of this system is you come over here. Let's just close with 50-day moving average. Again, the stock was what? Insert plot. Now you always have to come over here and adjust the y-axis. We're going to move it up to I don't know. Let's try 80. Okay. So now we got a basic plot with the this is for if I recall. Make sure you all and of course the history is updated automatically like once a day after like 4 p.m. or something like that. So basically what you can see here is Consolidated Edison back in May had, of course, a lot of stocks had trouble back in April, right? So they back over here, but then it went above. And 7 went back above the 50 moving average, but now it's down. Now it's back up, so it's still a bit of a roller coaster ride. But the beauty of this is what? Come back over here. change the symbol, get a new plot. Okay, so you can see IBM is back above the 50-day average. Okay, and that's a very basic plot. And then you can come over here, plot cumulative returns, also, right? Which of course is why we buy blue chip stocks, right? Because why? Because of the so this now gives us a returns for Consolidated Edison by day. Okay, and you can see the good news is if you invested back over here in January, your stock your returns have grown by roughly 45%, which is good. Okay, because of course we are always long-term investors, right? We're long-term investors. So there you got a basic plot. So that's the first part, you know. And we can do different things. We can do, you know, we could also do a shorter term moving average. You come over here like this, right? Create a simple, you know, a simple dashboard. All right. And there it is. Come back over here now. Do close. Let's do a 20-day moving average. Do an insert. Recommend a plot again. Let's do this. Once again, come over here. Let's say 200. Okay. So now over here, this is a 20-day moving average, right? We got that. And you can see this is a little different. You know, we could have looked this long term and said, well, you know, it looks like, you know, so we have quite a bit of volatility. We had some periods of time. It's almost as if we had 2 periods of time when it's below the 20 moving average, it's moving down, and 2 periods of time when it's above. It's kind of interesting, isn't it? Over to our dashboard over here. Then put this down here. This way you can zoom in and scroll down at the same time, right? So what else we got here? Let's go ahead and plot. Let's go ahead and plot the high-low 20-day average. Okay. I'm not quite sure, you know, how to evaluate this because it varies slightly between. So this is 20-day high-low average. Supposedly. Let's add a trend line. Not very helpful. Exponential. Interesting. So this is interesting enough. We don't get a lot of action here for this number right there. Anyway, we'll move this over here also. Okay, so now we're slowly building up a dashboard. Okay, and the reason we're going to do this like this is because this way we can come over here. Okay, and zoom in on the plots. Okay, and again you come up here. Returns is a bit volatile this so far the year to date, but again it is up over the first of the year. This is a what is this one? This is a 20-day moving average. This is a moving average. All right. So 50-day moving average, it's currently above the average here. If we went 100 days, maybe a little longer. 20-day moving average. If you look at, if you only look at say the last, say the fourth quarter so far, you can see that what Con Ed is above the average, so that's good. It dipped down, but it's still it's a good chance. Hopefully, it'll close out the year above the 20-day moving average. Okay. Now let's go over to Tunisian stocks. This is a little bit different, something a little different. Okay. Look over here. Delete all this. All right. Ignore the errors. Go over here. Come over to investor.com, investment.com. You can sign up for a free account. You get lots and lots of pop-up ads, but that's okay. My watch list. Okay. My watch list currently contains some let's go with BIAT. Okay. It has the highest volume. Historical data. Okay. Barry's Big Shot. What that is, historical data. We're going to come over here. Over here. We're going to come back up here to. You want the year-to-date data. January 1st. Over here, apply. Okay. Always want to make sure your data's plotted, right? Make sure your data is sorted correctly. Okay. Go over here. So this is already sorted. Let's go over here now. We'll just copy all this. Okay. We go over here again. Now we just cut and paste the data and we should get some numbers, right? So I didn't open up the data, did I? Huh. Why can't I? How can this have 3%? Oh, okay. Let's get rid of this. Let's try open the data back up again. Control C. And now we got all of our values for this stock in Tunisia simply by using a simple template. Okay. Of course, as always, don't be bashful. Stop by the chest and say hi. We can begin again. Prices closed. Let's do a 20 average. All right. Insert plot. Again, come over here, change the plot. Now we got that, all right? So now we got 20-day moving average. So you can see, right now it's above the 20-day moving average, so this could be a good sign. this is curious. I don't understand why it's taken so long to do this. The data isn't that big. It's really kind of strange. Interesting. All right. So this is the 20-day moving average. Okay. Come back over here to Tunisian stocks again. Let's do a 50-day moving average. Insert, plot, plot. Over here again, let's try 90. So this is looking okay, and if you look over here, these two up there. So according to 50, it's doing okay because it's above the 50-day moving average, okay? Very nice. Over here, what are we going to do now? Let's plot cumulative returns. Insert line plot over here. Once again. There we go. That's curious. Okay. Cumulative data return. So if you invested $1 back here, your investment's now up as a 16% return for the year. So let's put that over here also. Okay. And again, I'm not quite sure what the high-low actually means, but we'll take a look over here at the interesting. Interesting. No, this probably isn't right. This should probably just be a number, right? Yeah, there we go. It's a little better. So this is just the average return, or the average high-low. Let's try this again. Price. Now, of course, I'll just say again, I'm not really sure how to interpret this, but nonetheless, there it is. So what this represents is the change it's essentially the percentage. It's the average difference over a period of time between the high and low price. Okay, let's do something a little funky. Okay? Let's come back over here. Let's plot. By the way, price is closed. Okay. Let's just do a high-low plot altogether. Okay. I have a hunch it's probably going to be that much difference. Over here again. Let's try 90. Yeah. So if you look over here, you don't really see you don't really see that much difference. Okay, between the high and the low. It's not that crazy. So I'm not really sure why we're getting this big dip here. Okay. Let's do one thing. Let's come over here. Let's what I'm looking for is a way to we could plot the change also, since that's given to us. This will give us an even plot, okay? Okay, so this is a little crazy, isn't it? We'll put it over there anyway, just for the fun of it. So what you can see is there's quite a bit of, change. Most of the change is under like 1% a day, plus 1, 0 to plus 1% a day. Of course, I think we're probably also missing some numbers, okay? So anyway, so there you have it, a quick example of how to do basic stock analysis inside of Excel using simple built-in functions, nothing tricky whatsoever, and how to cut and paste data from investment.com, okay?